What is up, everybody? It's Sam, Hoops to Homes Coleman, and today I'm going to show you guys what is happening with this market crash. So guys, if it's your first time joining me, feel free to like, subscribe, drop a comment. On this channel, I give tips and tricks on how to buy and sell real estate. I help agents build their business, and I do property tours. And follow me on all social media at Hoops to Homes, at Sam Coleman Jr. So there's all this talk going on about the market crashing. In 2021, the pandemic extended longer than the 2 weeks that they originally told us we were going to be locked down. This pandemic has been going on forever, and everybody's been locked down in their homes. People have lost their jobs. People are in forbearance, not paying their bills, et cetera, et cetera. But for some reason, the housing market took a turn. Back in March of 2020, me and a lot of my friends were kind of biting our nails trying to figure out what in the world is going to happen in the housing market. Are we going to be able to sell homes? And for myself, how can I do open houses when we can't leave the house? So about 2 weeks, we were shaking our boots, and then something happened. Interest rates started to decline and demand for homes started to increase. Part of that was maybe some people started to realize that I'm trapped home and I hate my home. It sucks. People like myself and my wife, we realized that, hey, we both can't work from home. We need our own office spaces. We need a bigger home. Our girls were stepping over each other, the dogs, everything. We need more space. So a lot of the people that started to buy homes, that could have been a challenge that they were facing in their current home. Or maybe it's an older home and they wanted to upgrade. People are spending more time watching HGTV, $1 Million Listing, and now they want their homes to look like that. Whatever the case may be, people started buying homes at a very, very rapid pace. Now, interest rates started to decline as well. I remember distinctly the lowest interest rate payment that I was quoted for a client was a VA, and it was about 2.25%. That was incredible. It's like free money, basically. So with interest rates so low, and a lot of people not really wanting to be in their houses, like, hey, well, let me sell my house and let me get into another one. And that started to create what we have right now, an inventory shortage. A lot of people aren't necessarily talking about the forbearance. So most people have been in forbearance since March of 2020. We're approaching March 2021. So for about a year, a lot of people haven't been paying their bills. They haven't been paying their mortgage. Their car payments are in forbearance as well. Student loans are in forbearance. At some point, people are going to want their money. The government has been printing money like it's nobody's business and just been giving it away. Who's going to pay that bill as we continue to go into debt? People like us. Yes, we're going to have to pay that bill. People are going to need to pay their bills that they haven't paid over the last year. Whether it's a balloon payment, they're going to increase your monthly payment, or they're going to put it on the back end of the loan. Either way, that money is going to be due. And how does that relate to a market crash? So right now, where we are in the Las Vegas market, we have 2,200 homes on the market. 2,200, that's literally just less than a month's supply. So out of 18,000 real estate agents, it would take us about a month to sell every single home if no one else decided to list their home. That's not a good place to be at all. So back in 2008, when the housing market crashed, we had reached a record low of about 2,400 homes in the market, and the median sales price was at an all-time high of $315,000. Right now, the average sales price is $345,000. So we are in that territory for sure. We've exceeded it. So with inventory so low, interest rates are now starting to slightly creep up again. Home affordability is going to change. Now, when people realize that they have to pay their bill, what's going to happen when they realize they can't? They're going to want to sell their home. The good thing is a lot of people are equity rich, especially if they purchased between 2010 and now. Now, if you bought yesterday, of course, there's no time for you to build equity. But if you bought in that time, you're looking to get out of your home because you haven't been able to pay your bills because of job loss, et cetera, you have an opportunity to maybe sell your home and not necessarily short sell it or be foreclosed on. They've extended the moratorium, and now we're going to be pushed back into June. Well, I feel like that's just putting the Band-Aid on top of the Band-Aid that already exists. So when you rip that Band-Aid off, all this ugly is going to happen. Who's going to pay for all this? What's going to happen is inventory is going to increase. Prices are going to stabilize. They're going to stabilize for a little bit. And then when the dust settles, prices will dramatically come down. Interest rates will probably go up. And if they do go up, hopefully they stay low for a little bit of time. But even if they go up, it's still historically low. It's not like back in the day when we were getting 12, 16% interest rates and they thought it was a deal. But even at 4% or 5% interest, which is still relatively low, home affordability will change. So generations like millennials, Gen Z, or Gen X, they don't know the 12%, 14%, 16% interest. So going from a 3% interest rate, which has been going on for some time now, going to a 4 or 5% interest rate could really scare home buyers away from purchasing a home. Now, there was also a stat that said that 88% of the younger generation look forward to buying a home, not necessarily for their family, but for their dogs. So home buying will still continue to increase. Deals will still happen. In 2008, 2009, when people were just completely in disarray, things were still happening. Transactions were still happening. Money was still moving, not at the pace that it was before, but people were still buying homes. My humble, uncertain prediction is that by the fall of 2021, we will start to see the beginning of a market crash. If you find value in this video, feel free to like, subscribe, drop a comment, and add me on all social media. And let's all pray that I am 100% wrong.